All right, so welcome to this session.
Yes,
So,
sir.
basically, you already understand um market structure. You know the three things I look out for in whenever I see a chart, any chart at all. Three things I look out for, or three strategies. Three things. You already know them. You know there's market structure, there's
Yes.
liquidity, and there's point of interest. These are the three strategies or three things I trade in the financial market: market structure, liquidity inducement, then point of interest. So you already know how an uptrend behaves. Market structure comprises of uptrend, downtrend, then ranging markets. You already know how an uptrend behaves. Basically, something like
Mm.
this, like this. You already know all these things. This is how an uptrend
Um,
behaves. Then a downtrend, you know how a downtrending market behaves.
yes, sir.
This is how a downtrending market behave. Then for a ranging market, basically price moving from point A to point B, point B to point A, point A to point B, point B to point A. Market just consolidating or ranging. That's for ranging market. So these are the things I just look out for. And you know also in the market structure part of the strategy, in market structure is either you are trading continuations or you are trading reversals. You are either trading continuations or you are trading reversals. For reversals, it is whenever I see a market structure shift. You get whenever I see market structure shift, I know that price is about to what change direction to an opposite side or to the opposite side. You get it. Then for continuations, is whenever I see a break of structure, I know that price is still going to continue in that particular trend. Like for this thing now, for reversals, basically price did something like this, came here and what, then shifted from this particular place, came to this side and what, moved up. This is more like a market structure shift. This one indicated a reversal. This market structure shift here indicated a
Yes.
reversal, and it shows that what price is about to reverse. Then for the break of structure is just showing continuations. The reason why I'm still telling you about this thing is because of what I want to what show you. I want to just show you something here. So that's just basically what I look out for. So just this particular price action here, from this up to this down, and perhaps we're going to talk of some others. So, but let's just talk about this particular zone from this point to this point. You get. So
Yes.
this is the 4 hours, right? This is the 4 hour zone. You could see where price reacted from this particular place, where price came and react from. It's more like a breaker block. You get. So what we
Mm.
are actually doing in the market is that we are waiting for price to like react from zones, because higher time frame zones are zones where we are anticipating a reversal in the market. That is, there should be a major turning point of price from those particular zones. We are expecting a major turning point. But whenever price comes to these higher time frame zones, we don't just take trades blindly from those zones. We are expecting price to like reverse from those zones. Yeah, we are expecting price to reverse from those zones, but what are your contexts? What are the things you are looking out for so that when you see price react from those zones, you don't see a confirmation that price is actually going to reverse in the opposite side. So that's where the market structure shift comes in. So I probably will be anticipating for price to come to this particular place and react from. But price may have reacted from it, but it will not show in this 4-hour zone. Price may have reacted from it, but still broke past it and came to this particular breaker, this place, and reacted. Then what? Went up. But before then, what did price do? Price actually reacted from this order block here. You could see a 4 hours order block. I'm going to go to 30 minutes and show you something. This is a 4 hours order block, right? This is a 4 hours order. You saw price reacted from it. When price reacted from it, what did price do? Price went down to another zone here, which was a breaker. Price reacted from that breaker block and what? Reversed up. Do you get it? Price reacted from this
Yes.
other block here, dropped down to this breaker, then what? Reversed up. It means that as price reacted from this other block, we are most likely going to be taking sales in the market. We are going to be what? Taking sales in the market. But let's go to the 30 minutes time frame and check out for something. Thirty minutes time frame. That place is actually very, very fast, so that's why it's taking time to. Because
Yes, yes, yes.
it's a 4 hours zone. All right, I guess it's this side. Yeah,
Okay.
do you
Yes,
see it?
yes.
You saw it, Ba? Are you seeing it now? You
So
saw this zone was the zone we marked out for our 4 hours. And we said that what
yes.
price actually reacted from it and came down. But looking at it, you saw that price reacted from it at the what? 4 hours OB. 4 hours OB. You know, for the strategy I trade, I look out for, like for my point of interest, it's just 2 points of interest, my order block and my breaker block. Are you getting it? So my order block and my
Yes.
breaker block is what I look out for the point of interest part of my strategy. So from the 4 hours, price actually reacted from an order block. All right, if you say you want to take trades from this 4 hour zone, that when price comes to your 4 hour zone, you sell. Your stop loss is going to be very, very, very big. And the money you will be risking will be what? Very big. Then your reward or your targets will be small. But in order for you to maximize this particular setup where it's good you go down to what? The 4 hours and know what price is going to do so that you can maximize that setup and use it very, very well. All right, deleting this 4 hour zone, we already know where price reacted from now. So deleting
Yes.
this zone, looking at what price did from this particular place, you will see what price was doing. Price was trending upwards at first. High, low, high, low, high. Then price what broke this last low in the market. When price broke this last low, it then what pull back to this particular place, then dropped again. All right, then ranged at this particular place for some time, then came back to a point of interest here and mitigated, then dropped. So
Yes.
Let me show you. Let me mark it out for you. This place was where it shifted bearish. It was bullish before.
Mm.
From the higher time frame, you could see price was bullish, but it came to this zone, let's say here, the last low. It came to this zone. Sorry. S. So it came to this place, did MSS here, then what? What's the first pullback? This place is the first pullback. Is either this particular week or this
Oh,
one. Yeah, you get it. So that's the first
yes,
pullback. We've gotten the market structure aspect of our strategy. We know price is bullish, but now price has what? Shifted structure, market structure shift. So now,
yes,
since there's a market structure shift, we know price is now what's turning bearish. But how do we maximize this opportunity? The second thing is our what? Inducement. Our inducement is from this particular zone. This is our inducement. Then the third thing we are looking out for now is our what? Point of interest, which is either our order block or our breaker. So if you look at this, you will see 2 points of interest here. This first one here is our order block.
yes,
This is our order block. Then you will see a breaker block here. This place was actually a zone. I told you, a breaker block. For instance, let's say we have something like this. Let's say we have price trending upwards like this. Price trending upward. Market did something like this. And what? It broke this last low. This low here is a zone in the market. It is
yes.
it is a is also called what's it called?
Protected low, abi?
Yeah, is a protected low. Is a protected low. Since price broke past it, this place was supposed to be a zone that will what? Push price up.
Upward.
That is, if price comes, price is supposed to what? React and go up. But this low, this place broke. I'm trying to remember key level. Is also a key level. I'm sure you've heard about key level before. It was a zone
Yes,
that
yes,
previously pushed price to the upside. A key level is a particular zone in the market where you are expecting a major turning point. Where there's a major turning point, whenever price comes there, it's what reverses. So this particular place was this key level pushed price upward. So this place became a key level. So we are expecting price to like come there and react and still go back up. But what did price do? Price then what? Broke past it. So it now flips. Instead of expecting a buy from there, we are now expecting a sell. If we see inducement, liquidity closer to it, we will be selling from that particular zone. We'll now be selling from this particular zone. If actually we see an inducement that is what closer to it, something like this. So that same thing that happened here. If we go down to our time, I don't want to go down because I will be like, it will take me time to come to this
that,
again, you get. So
yes,
this place was a zone we're supposed to buy. This consolidation here, this was supposed to be
yes,
a buy zone, but price broke past it. You could see the momentum price used to break past it. Then we now take our sell from this zone, maximizing the setup. You could see that instead, you see now, if we want to place our position 2 in this now, in this particular trade, our what's it called? Our
SL.
SL will be just below, above this high, slightly above this high, maximizing it, you see. But if we picked our entry from that 4 hour zone, you see that our SL will be very, very big because we are trying to place our SL above the highs. But since we already know that price has already reacted from this zone, from this breaker block, we know price is not going to come back here again because this is zone closest to liquidity. So we maximize the setup where place our SL above our zone. Then if you want to swing, you will be swinging down to this particular place. That's why it's very good for you to know the directional bias of the market. You'll be swinging down because you already know that price has turned what? Bearish. Yes, you know where price is going to. So perhaps your target will be at this particular place. That's for our first sell. That's for the first sell, right? Then for the second sell, now, you could see this one now is more like a break of structure. You could see is a break of structure, not more like. You could see what price did.
Yes.
You could see what price was doing here. Price was doing something like this. It came to this zone, went up, came here, went up. It means this place is resisting price to what? Break past it. This is a support level. You know, price is downtrending. So if price is downtrending, it keeps breaking what? Support level, key levels in the market. So price went up, went down. This place is still resisting it, supporting it to what? Like maybe go up. Price has already mitigated our what? Zone here. Then price then break this. Price broke here and also broke here. This is what we call a double break of structure. Whether you say break of structure or a double break of structure. The reason why I say is a double break of structure is because why price broke here, it also broke here. There was a consecutive break of structure. Price broke here, price broke here. You see all these levels here, all these things here, price broke past it. You get? So there was a break of structure. We could mark from here. This one is the current break of structure. Then this one is also a break of structure too. So we could mark from this place to this particular place. That's our what? Break of structure. Our break of structure. Where is our inducement? You see, after the break of structure, this week here is our what? Inducement. That's why I told you that depending on the volatility of the market, your pullback can either be a single week or a full candle or multiple candle weeks. You get it? Okay, for this one now, you could see there was a full candle that pulled back. You get?
Yes.
These full candles, multiple candles pulled back here. But at this particular place, you could see our inducement was just what? This single candle. That was because there was much volatility in the market. There was momentum, a lot of momentum in the market, and price moved down aggressively. You get? So
Yes, sir.
Where is our closest point of interest? Remember, we have this zone here. We have this, maybe this up as our order block. We have here, because this was also a zone price broke. We have here, possibly we have our order block at this extreme zone, possibly. Then we still have a zone, current zone that market broke past. The current zone market broke past was here.
Yes.
So this is our current zone. Here was our current zone. That was why you saw price what reacted from it and what went down. Guess what? We'll still be targeting that same place we are targeting for our first. That's why if you can know the direction of the market, directional bias, you can actually what day trade and also swing using this strategy. It works very, very well. If you can catch the trade from the beginning, from the origin, then you set your SL. For people that do not have any context about this trade, they don't know where price is going to react from. They might be waiting for this zone, but guess what? Price won't get to that place. But you that know how market structure works, how liquidity work, and your closest point of interest to liquidity, how you could maximize it to your own advantage and get into the trade, it's a very, very big advantage for you. So people that does not know all these things will may probably set their SL above here, but you that understand liquidity, set your SL maybe probably a little bit above your point of interest, targeting this same down. Or if you want to day trade, you just target this particular, yes, this structure here. You just target this place if you want to day trade. But if you could open two positions, one for day trading and the other one for swing. I don't know, depends on your risks, depends on your plan. It's your own way of trading. You know what will actually work for you. So you could target this same low, this same place we are what targeting for this particular one. So knowing this, we've already what gotten two trade correctly. All right, looking at this now, looking at this particular one, you see there's a break of structure here. There's a break of structure. There's a break of structure. For me, I would have used this particular wick here as my inducement. I would have used here as my inducement. I would have used here as my inducement, but and would have also used here as my breaker. You know, this is a current zone price broke past.
Yes.
So I would have used here as my breaker block. But price actually what took out this liquidity inducement, came up, but didn't what tap us in. Are you getting it? Price didn't tap us in. But price later came back, invalidated this particular zone, then reacted off this order block. So you might not actually get it 100% of the time, but most of the time it is actually what's going to work. The surprise invalidated this zone, and this zone was the zone closest to what liquidity. So price invalidated it, came down to what the order block and took some orders before what going downwards. You get it? Okay. Got another break of structure here. But price didn't go up to what trigger anything. Got another break of structure here. But price didn't go up. Okay, then looking at this zone, looking at this, we got another break of structure here. Please, can you turn off your mic? It's like there's noise in your place. All right. We got a break of structure here. This is another break of structure. Then we use this as our pullback. This place as our pullback, right? This place as our pullback. This is our pullback. We would have used this, right? But price actually has taken out this already. This is a more valid pullback. This place is our pullback. This is our pullback. Then where is our current zone that price broke past? You could see there's an order block here. There's an order block here. But price didn't get to this order block. Price reacted from the zone or the POI closest to liquidity. This is the place price broke past with aggressive move. Then this particular place here is our what? Breaker block. This place here is our breaker block. That's why you see price what? Reacted from this place and what? Pushed downward. So that's just how we could use this as an advantage in the market. You get, if you go to 4 hours, you see a zone I drew from this place. This line here is a 4 hours breaker block. You saw that what? We already know that price has reacted from an higher time frame zone. So price is coming to this breaker block to what? React. So we could set if we are swing trading, we take profit at this particular place. And once price gets to this place, we know that there will be a major turning point in the market. And we'll now be what? Looking for buys when we see an MSS. So price reacted from this place and what? Went up to do something like, yes, did MSS, shifted structure to this side, came back, reacted, and what? Started buying. I would have shown you, but time has actually elapsed. Time has already elapsed. So that's basically how you can do it. This one is just the sell version. Maybe I'll take some time and maybe we'll go live again and I'll do the buy on for you. So that's basically how you could use market structure, liquidity inducements, and point of entry to your own advantage. I hope you understand. So you saw what price did here. So basically, we could even be targeting this particular zone because we know price is going to what come to this place to come and what react from them. You could see yeah. The first one was how many arrow? The first one was 47 RR. The second one was 34. 47 plus 34. You see how many RR you got actually going to be going out. You are going to be taken out from this what particular trade. So this is how you could use market structure and every other thing to your own advantage to also know the direction of the market. You saw price reacted from this zone and what started buying. There was now a major turning point in the market. Price started what? Buying. So price is definitely going to buy and take out this trend line liquidity because this particular zone is a what? Trend line liquidity. Price is actually going to what? Take it out. Do you understand? Price is going to take it out. Let's see whether I can see one buy. Let me see. Let me show you a buy version. Price already reacted from this place. Price reacted from a breaker. You get it?
Yeah.
Yeah, let's go to, let me see whether I can show you some examples on the buy. Some buy examples rather. I have less than 6 minutes.
Okay.
This is it, Abi. This is it now, Abi.
Yeah,
Yes.
yes. Exactly. Yeah.
All right. There are some way you could also take buys because if you know, but that would be counter trading. Let me not talk about it. If you know price is going to come to this point of interest, you could take buy from this zone and buy to this side. But that's counter trading. I don't advise anybody to do counter trading. It's very, very what risky. It's best you follow market structure, what price is doing. You get, so it's best to save you a lot. It will save you from a lot of stress. All right, so price already reacted from a higher time frame zone here, which was a breaker block from this particular place. Price already reacted from it. This zone was not clear, but this was our first MSS. This place I marked here was the first MSS. Price came back down, reacted from this OB. So this place is a mitigated zone. We don't expect price to what come back down. This zone is already mitigated. After the break, the market structure shift, you see price came down, mitigated this zone. So we don't expect price to what come back here. So then price expanded to the upside. Price then what expanded to what the upside, came down again, reacted and what bought. All right, I want to show you something maybe from the 15 minutes. Oh my god, this thing is gonna, I would
Just
have
you
shown,
can mark.
huh? I would have shown,
Don't worry.
you see this particular place, after this MSS here, sorry, after this MSS, you saw there was a break of structure here, Abi. So this break of
Yes.
structure, after this break of structure, you could use here as your liquidity. I would have gone down to the lower time frame and show you something here. You could use here as your liquidity. That's why you see price came here, reacted. Price did something like MSS at this particular zone. It did another MSS here to, for price to now what, push to the upside to take out this external range liquidity. So I would have shown you what price actually did from there. This place was more like our inducement after that break of structure. This was more like our inducement. So the reason why price, you already know the reason why price didn't get to this place because this zone is already what? A mitigated zone. So price only goes to places where there are still a lot of orders for it to go take it out and what reverse to where it actually want to go to. You get, so that's why price didn't get to this zone again. It's a mitigated zone. Price then reacted from a zone that was what closest to liquidity before it now bought to the upside. So that was how I would have gone to, would have done more. All right, from this particular place, you saw what price did. Price was, price already broke structure here. Then what did it do?
Give me.
price, it broke structure here. Price did something like this, up, down, went up, went down, went up to this side, then what? Shifted bearish. This bearish move is not going to be for a long time. The reason is because price is still what? Bullish. This is just a small sell we are going to experience in the market before price will now what? Reverse to the upside or to the place it was going to before. So you saw price broke this last low here, which was our MSS. What? Pulled back here, then what came and reacted off this breaker. So this breaker, there's an order block here, but this order block is not closer to liquidity. This breaker is closer to liquidity. That's why price was reversed from this breaker block. You get? So that's basically what price did. Even here too, there was a shift also at this place rather. There was a market structure shift here. There was a market structure shift there. And this place is our liquidity. So that is why price came and what sold off. So that's how you could use this to your advantage